Also expected to keep increasing in value is the Chinese yuan. Beijing has long resisted pressure to quickly raise its exchange rate, but recently the currency broke through the 8 yuan to the US dollar mark. And many believe it will match Hong Kong's rate to the US dollar very soon. Douglas George looks into what it means for us when that happens.
That's not what the U.S. president wants his Chinese counterpart to do on the yuan's exchange rate. He'd like China to stop holding back the currency's rise, and said so during his summit with President Hu Jintao last month. But the Chinese president resisted, saying an orderly rise was how the Chinese wanted to proceed. And it made a smooth passage through the 8 yuan to the US dollar mark, and many expect it will soon be settling below 8 on a regular basis.
We're looking for it to finish the year at 7.7 now. That will be a pickup from the gradual move through 8, probably towards 7.9 in the September quarter.
Others agree the yuan will match Hong Kong's 7.80 rate to the US dollar by the end of the year, but that's not where it ought to be.
I think they have plenty of room to move to something like 7.5 by the end of the year. And I think it's exchange rate change of that kind of magnitude that will be needed to try to end some of these imbalances that have been building up in the economy.
Imbalances such as the enormous trade surplus with the rest of the world and the huge influx of foreign money flooding into an already booming economy. But more on that later. Back in Hong Kong, as the yuan reaches 7.8, what impact could that have on us? One economist here says Hong Kong could be flooded with speculative funds taking bets the Hong Kong dollar will rise with the yuan. That could spark asset price inflation.
If we look at what's been happening to the region as a whole over the last few weeks, every currency in Asia is rising, except the Hong Kong dollar, obviously. Hong Kong, it's reflected in HIBOR rates falling below LIBOR rates once again. I mean, as the exchange rate moves upwards, people expect, there's a lot of speculation that this will lead to changes within Hong Kong. And so there will be capital inflows into Hong Kong, and that will lift asset prices. It does have implications for the real economy here.
But as with most things in economics, there is a flip side. Our other economist believes it will be a good thing for the SAR.
As we start to see the yuan appreciate, obviously that's making the goods, the services Hong Kong can provide cheaper. So for mainlanders, it will continue to make Hong Kong an attractive tourist destination, and it will continue to make our services competitively priced.
Since July last year, the yuan has risen 3.4% against the US dollar. But the pace of the rise is far too slow for some, especially the US, a country with a $200 billion trade deficit with China. Even at the yuan's stronger level, the trade surplus will continue to grow, while the Chinese economy threatens to overheat.
If it moves to 7.8, I think it perhaps begins to mollify some of the critics. But I think the more important question for China, and the reason why exchange rate changed to more than 7.8 is much more important now, is it's in China's domestic interest to move further. Clearly, the economy is still growing very strongly. Investment growth is very strong. The reason investment growth is very strong is related to the fact that the currency is too weak and there's a lot of money flowing into China. It's very simple. So exchange rate change really should be playing a role in tightening within China.
Again, there's that flip side.
The risk is if you move too abruptly, that you can expose imbalances in the domestic economy. So a more gradual approach is prudent.
Economics, not called the dismal science for nothing.